telling me that you have a way to defer the tax situation there? Is that what you're telling me?
Yes, absolutely. Yes. And so the first one I was referring to is a 1031 exchange, which only applies to investment real estate. The second one I'm referring to is called a deferred sales trust.
A real eye opener to see that there are ways that people can use the regulatory framework, if properly structured, to invest 1031 exchange dollars in things that you would not think were like kind to what they exited from. So it was very impressive. I got to say, you are the first one I've seen pull this off, and I'm pretty hesitant to believe in a lot of these kinds of things. So it's a major feat for me to say, wow, this actually really worked, and it was really cool.
1031 is a way to shelter your income when you sell the thing. The DST is a way to avoid the 1031 and not have to suffer the time penalty.
Our career and during different tax periods, we've seen, these tax avoidance, tax minimization, offshore, all these different strategies undertaken to minimize or avoid taxes. And then I can tell you that, some of them are just not worth the trouble. And so I was skeptical. Admittedly, I was skeptical. I thought, oh yeah, here we go, another one of these, right? And then they say, no, it really is different, right? So look more closely. We looked more closely. We had, honestly, 2 years of conversations. 2 years. Now we were being due diligence at the same time that we were doing due diligence, but 2 years is a long time to be, sort of flirting with the idea of and getting to know the people and getting to really understand the transaction. Yeah, long story short, we got comfortable, although we are not tax attorneys, lawyers, or estate planning attorneys, that at least, from an investment perspective, that, it made sense to sell a highly appreciated asset, get liquid, hold that in this type of a deferred or installment sale type of instrument, and then just be in a position then to do the most important thing. I'm probably stealing your next question, which is time. They say, well, you can't make more time. You can. The Deferred Sales Trust, in a way, allows you to lengthen the investment time horizon for those assets after getting liquid, but before having to feel the tax impact. And from an investment manager's perspective, time horizon is the most important element in investing.
All right. Hello, everybody. Welcome to another Crypto Deferred Sales Trust Mastermind, brought to you by Capital Gains Tax Solutions, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options, and not having a clear plan can be a very frustrating part of trying to exit highly appreciated assets, including cryptocurrency, including businesses, real estate, including primary homes. And having the Deferred Sales Trust as a way to defer that tax can unlock freedom for you and or the clients that you serve when they want to exit, because of what? 30 to 50% is typically the tax. Depreciation recapture factored in on, depending on the asset, is what you're going to suffer should you not have something in place ready to go upon exit. And so I'm thrilled to be here. For those who don't know me, I'm founder. My name is Brett Swarts, and I'm founder of Capital Gains Tax Solutions. And every single day, we're trying to help people make great decisions, review their options, and then hopefully earn their trust to build a dream team to help them execute on this strategy. And I'm more than honored and excited to also have my co-host, one of my business partners, Strategic Alliances, Jake Miller, financial advisor extraordinaire, as well as I call him the CPA Whisperer. Jake Miller, how you doing?
Doing very well. Well, thank you, Brett. With an introduction like that, I almost don't know what to say next.
Well, tell us about the vision for why we're here.
Exactly. So we are fortunate enough to be here to help people who are experiencing a capital gains transaction or event. So somebody who has a highly appreciated home, somebody who has a highly appreciated asset of one kind or another that's up for sale, or somebody who's selling their business, somebody receiving a stock option, somebody selling crypto. There's so many different types of events that could be considered the sale of an asset that has been highly appreciated and would otherwise be subject to capital gains, of which we can defer those with the Deferred Sales Trust. And that's why we're all here today.
Excellent. And Pierce York, I'm looking for you, Rails, brother, another strategic alliance business partner of mine. Pierce, are you here today? How you doing? He might be on the beach. He probably is. Good for you, Pierce.
He's
He might not be here today.
Find those luxury homeowners somewhere, right?
Yeah, and so we're going to cover the vision, which we just kind of talked about. Then we dive right into the deal story close of the week, and then we move into frequently asked questions, maybe some objections, maybe some things that Jake and I uncovered this week, and we're going to try to impart that knowledge and wisdom and experience to you, who's either again going to use the deferred sales trust for yourself, or going to help one of your clients do the same. And so, with that being said, I'm going to move into a deal story that is a live story, but it's almost like a what not to do. Because guess what? There's some people out there, Jake, they don't want you to know about the deferred sales trust, including some 1031 exchange companies. And so this is kind of like what not to do and like who not to use to make sure that you're not in the same position. So Jake, this is what's going on. In fact, it's happened. I just heard about it about an hour ago, but they've been battling a company called IPX for about 3 weeks on asking them to please accommodate their deferred sales trust so that they don't have to suffer about $850,000 of tax liability. So here's the story. So this couple is selling, and they're in the senior housing assisted living facility business, and they're looking at a gain that's substantial. They're selling for $5.5 million, business and the real estate combined, and it's basically they take care of folks that are elderly, and their basis is $2 million, and their debt is about 1.7. So their gain is about $3 million. And so in the state of California, state, federal, and Obamacare, some depreciation recapture, looking at about 40% liability, which would be about 1.5 million or so, or about 1.3 million on 40% would be 1.2 million of tax liability. They had a little bit of carry forward loss, which is also interesting to also, you always want to check if you have carry forward loss because it can offset some of that. So they had some carry forward loss. So their CPA said, yeah, you got about 400 of that. So you're looking, or 350. So you're looking at about an 850 liability if you don't perfect the exchange. And so they're going for their exchange. They're optimistic they can find something. Well, guess what happened with the banks? The bank said, hey, look, since you just sold your business, we can't count your income anymore, so you don't qualify for a loan. So they go out shopping, doing all these things, think they found these deals, identify the properties, just to find out that they don't qualify for a loan, which is a whole nother subject to talk about. And they have millions of dollars sitting at the exchange accommodator, and they're like, what? We've been successful. We just sold our business. You can't give us a loan now. They might go for like a hard money loan, might do something else, but essentially the numbers aren't making a lot of sense, right? Because the next loan quote was now around 6% versus like 3.5. And they're like, these numbers aren't making sense. We don't want to overpay. What are our options? Well, they did call and reach out to one of our strategic alliances, Rebecca Munson here. And Rebecca, do you want to pick up on the story from there?
Yeah, so they had been identifying property along the way. They're just struggling right now to really figure out what the next step is. They will probably not be able to at least do one of their transactions and maybe multiple transactions in their, and the accommodator is not very flexible they might be knowledgeable, but the first line of defense is always to say no, is what they're telling us.
Exactly. So. And for those who are wondering who it is, it's IPX. And I recommend that you never use IPX for this exact reason. And I know that's a strong statement, but we've battled IPX for years. And unfortunately, they don't want to accommodate and they don't really care. It's what kind of the feeling we get from them. And they have that prerogative, right? It's their company. They're the big 500-pound gorilla. But I could just say that this client is never going back to them ever again. It's kind of like calling the Wells Fargo. Hey, Jake, you ever call the Wells Fargo bank and you have like that fee and that first person says no? What do you usually do from that point if they say no, they're not going to reverse the fee?
Then we just don't go with them. I guess, that's just not a good sign for continuing business, right?
Yeah, it's that, or you ask for the manager up top, right? So you say, hey, is there another manager that I can speak with?
Keep going one step higher till finally somebody with customer service sense helps you out, right?
Yeah, exactly. And so this is, by the way, this has happened in the past. I can't say IPX is going to do this. I can't speak for them, but we do have a contact at IPX who's in the upper corporate management, and they have been able to be accommodating. At the end of the day, we're not asking the company to provide legal or tax advice, to provide an approval or disapproval of the deferred sales trust. We're just asking them to simply allow the funds to go to the deferred sales trust, which is all on the taxpayer anyways, and it's not on the accommodator. And so this is part of why blockbuster 1031s aren't great, right? Because they're so restrictive, and even worse, the old companies are very restrictive sometimes. However, there are amazing accommodators. I can't throw them all under the bus. There's amazing accommodators that we work with that allow both options, that have signed the NDAs, that have reviewed it, that have no problem, because there should be no problem, we believe, in them allowing the deferred sales trust, or allowing the 1031 exchange to go into a deferred sales trust. So here we are past the 45-day identification. Here they are looking at $850,000 of liability. They've just sold their business. They're looking to do a whole nother part of their life. They're thinking they're going to be able to complete this thing. And now about 40% of their $3 million is going to be wiped out. And so we're battling right now. We'll report back what's going to happen, but I just want to make everyone aware of that. Be with us early, connect with us early, make sure you're working with strategic alliances. They're going to allow you both options, which leads into a couple deals that Jake and I are working on that are cryptocurrency. So Jake, you want to give an update on the large NFT deal that we're working on with the artist, and kind of some feedback on what we're learning along the way with some, competing ideas. What have we learned this last week or so?
It's been rather interesting. We have an amazing artist that really knows what he does and what he does well, right? Sometimes, though, a lot of these very successful people get surrounded by other professionals who maybe perhaps aren't always providing the very best advice. And so Brett and I have had the challenge of educating other professionals who weren't always there to play fair. And it's kind of a unique situation to be in. I want to say that we're in a good place, Brett, because we have following conversations with them that where I think, a lot of the individuals that are at least a little bit more qualified than the prior individuals are coming to the table. And that'll help us have a better conversation about the actual facts. Now, assuming that they're able to sign an NDA, we're willing to roll out the red carpet and show them how the cooks work in the kitchen, so to speak. Happy to do that with the tax attorneys that are behind this, that are the brain surgeons, so to speak, and more than willing to make all the proper introductions to other professionals that also would be the appropriate individuals to help make a very large case like this work. Whether it's an escrow officer at a very large bank, Brett, you made Michael such a wonderful connection that's able to help facilitate a huge transaction like that usually requires a KYC and a money transmitter and several other features just to make sure that everything's happening in the correct way. And all of this at the end of the day so that we can make sure that these really big transactions occur at arm's length and that they truly are third-party trustees and that we're able to essentially have these become a non-taxable event to the client and put them in control of when they pay those taxes or when they take contractual receipt of those assets.
Yeah, let's break that down, right? And so there's some top questions. First of all, we're going to just define for those who are new to us or just as a reminder for all of us, like what is a deferred sales trust and why does it work for cryptocurrency or business or sales or other assets? Like what about it allows the tax deferral? So Jake, in 90 seconds, what's a deferred sales trust? And then we'll dive into the 7 top questions you should be asking of every tax professional who's offering you a potential solution. So go.
Absolutely. You got to have a qualifying event in order to utilize a deferred sales trust, typically $1 million gross transaction with very low basis or $1 million net proceeds that come to you that is otherwise taxable. So there's got to be the pain of the tax to warrant the effort of building the team and making things go forward to where this event, we're sticking a trust in between you and the buyer, should you be a seller of something, whether that's receiving stock options, what have you. And because we're putting that in between the two people, essentially we're able to defer the taxes that would otherwise be incurred into a future date. Perfect. Similarly, within like a 401k, Brett, like if somebody's buying Coca-Cola, they sold out of Apple to buy Coca-Cola, and then tomorrow they're going to buy not Enron, right? Because that doesn't exist anymore, but something else. The theory here is that you're constantly having these transactions that if it wasn't inside of the umbrella of some kind of entity like a 401k or something else like this deferred sales trust, it would be taxable.
Exactly. And so the government's no stranger to tax deferral. In fact, they want to incentivize us to do things that are going to spur macroeconomic growth with more jobs, more tax revenue. And they win here, right? Because someone's exiting cryptocurrency or a business or real estate that otherwise the full potential of the full amount of equity that's been built up, there's not new money coming in and that money being unlocked to go somewhere else to build more companies, more businesses. And so that's why they allow this as long as you follow the rules. And some of the rules are third party unrelated trustee. Some of the rules are what's called constructive receipt, meaning you're not actually receiving or could receive or have too much control over the funds at closing. And that separation keeps everybody basically accountable so that you're not using the funds for just personal use, which is taxable, but so that it's with business use. So basically it's like the accountability and the integrity of the tax law that they allow this, but we've got to follow rules. That's why, by the way, why there's qualified intermediaries for investment real estate deals, right? Third party, unrelated, qualified intermediaries where the funds go to so that they don't go into a personal account or get commingled or mixed up into personal expenses or personal stuff. So that is the deferred sales trust in essence. Now, let's talk about the top 7 questions that you should be asking of us or anyone else that brings you some tax deferral strategies. And so during the conversation with multiple people, by the way, this is just this particular case, but we have folks that say, hey, what about this thing? Or what do you think about that? And sometimes it's very common, like an opportunity zone, which is, hey, great, if you can find a good deal, thumbs up. 1031 exchange. Yep, that's tried and true. If you can find a deal. Remember, 1031s only work for investment real estate. They don't work for crypto or a primary home or a business sale or artwork or collectibles. So yeah, as long as it's investment real estate, you're good to go. What about primary homes, right? Delaware Statutory Trust, which is another form of 1031, or charitable remainder trust. So there's kind of these made ones, but then there's kind of the ones that are kind of maybe more undercover. And so we get approaches like, oh, what about the installment sales trust, right? Which is kind of like a deferred sales trust. Well, that sounds really nice. But let's talk about the differences. Like, who is providing the actual legal backing of that? And how long have they been doing it? How many have been closed? And so these are some of the top 7 questions. Number 1, how long has it been going on for? Number 2, how many have they closed? Number 3, will they actually defend their actual clients? Have they defended their actual clients? Number 4, who's going to pay for that? Number 5, of those audits, if you will, if they've been through the IRS, what has been the outcome? And what happens if you get audited, right? Obviously, you also want to ask, what's the IRC tax code? Has there been any private letter rulings? Have it been reviewed by national law firms? And so all of these things create what's called the track record or the integrity of this. And the more you have the strong integrity, the more you can stand on the, I call it certainty of conviction of the strategy and of the tax deferral, because this is not something that you can mess up. Like, this is a one-time opportunity upon the exit, because once you exit, constructive receipt happens and it's taxable. So Jake, any thoughts on that?
I think it's just incredibly important that we're able to help people understand the process that we went through when we discovered the deferred sales trust, and we had other options on the table, and when it didn't work and when it did work, and why we are such big fans, I guess. If anything else, Brett, between yourself and I, if people took away all of our experiences and all of our titles and everything else, I would just say that we're the biggest fans of the deferred sales trust that there is, because we've been able to help several other people use it, and it has literally changed their lives because of that extra that they're able to do, because they're not having to pay those taxes right now.
Let's talk about that outcome, right? So we recently helped a Bitcoin seller, and she worked for a big tech company. Tell that story and the outcome so far.
Yeah, so we had a wonderful lady, worked for one of the big tech companies, invested quite a while ago. For her, it was just a big chunk of money, and it ended up growing to around $60 million. Fantastic, right? $60 million worth of Bitcoin, and wanted to kind of get her shoes wet a little bit, test things out. Took 5-6 million of it, rolled it over into sold out of her position, put it into the deferred sales trust, and she's accomplishing 2 things. Right now, she has a million of it that is liquid, invested in marketable securities that she's deriving an income from monthly starting in March. So as far as an update, things are going well. Money's getting deposited into her bank account. The other money, she wanted to do a joint venture. She wanted to team up with an old high school friend and help that person accomplish their dream. And they have an app, and it's teaching children in India who need a little extra help outside of school. It's an app that teaches them subjects that they would be learning in school. And it just helps them learn them a little bit better, get a little extra help while at home through this application. And that's a business, that's a joint venture that she's able to participate in because she didn't have to sell out of her high positions in Bitcoin and pay all of those enormous taxes right out the gate. She's able to defer the taxable transaction itself by utilizing the Deferred Sales Trust.
Amazing, right? And that's the key here. It's unlocking her freedom and passion with the funds versus having to suffer the tax consequences. And the government also loves it too, because guess what? It's creating jobs. It's creating, it's putting money into, arguably they would say too, hey, it's moving out of something it's a little more volatile, and it's putting into marketable securities that are companies that are creating more jobs. It's also diversifying her holdings as well. So versus a single asset class and a single coin. Which at one point we exited at 54,000 and then it went to 68. Then it dropped down to 35 within a few months. And so we're on the way back here. But all that being said is the Deferred Sales Trust was the bridge that gapped what she wanted to do and where she was with her holdings. And she could do it in a very tax efficient way. Happens to also live in California, which the Deferred Sales Trust can also defer some income tax to in the meantime, while the funds are invested in the business and while it's building up. So a lot of really cool things. And then we've gone on to do another one too for an Ethereum client who was a married couple in also the East Bay near San Francisco. And they bought Ethereum for 100,000, went to 13 million. They were able to exit all tax deferred about 7.5 of that. The other amount they're letting kind of roll up. And then we have a number of others that are waiting for some of the values to come back up. Cryptos take a little bit of hit. But in the meantime, we're closing business sales. We're closing real estate. That's always been the tried and true. For those that don't know, a commercial real estate broker by trade, started at Marcus & Millichap, have done the 1031 exchanges, Delaware Statutory Trust. And that's when I fell in love with the Deferred Sales Trust. And so our again, as a reminder, we want to help people exit and go into what their ideal wealth plan looks like. And that's why we're here. So I'm going to open up now for questions. We've covered some deal stories, and so I'm going to see if anyone has thoughts or questions. We've got maybe some new folks here. We've got. Let's see. It's open.
You know, Brett, we ask about thoughts and questions all the time, but a few of the faces here are familiar, and I'm just curious if some of them are also having Deferred Sales Trust conversations that they would like to share.
Absolutely. Anybody like to share?
I know Sridhar's been here a couple different times, and he has quite a unique experience himself with what he does. And you know, all of us know somebody who's having a capital gains type event, and it's an interesting thing to talk about that. Sometimes the psychology of speaking about money is very difficult because, you know, I mean, what are some of the common topics that you shouldn't bring up in most conversations, right? I mean, what are they? Politics, religion, money. What are, you know, most spousal arguments typically touching on, right? Sometimes those three, or sometimes it's first and foremost the money, right? Mm-hmm. So that's not what we're trying to help people get out of their comfort zone a little bit and be very open and discuss in this forum, which is live, which is recorded, which is rebroadcasted, conversations that are having about money, because these conversations can only help you, but not only yourself, but other people who then watch these conversations afterwards. And that's why Brett and I are here again. Again, first, I said we're the biggest fans of the Deferred Sales Trust because we've seen how it's changed people's lives. Secondly, because, you know, we want this information to be out there. We want it to be out there and available to those people who need it. Because literally, this Bitcoin client that we talked about today would not have helped out a childhood friend with a joint venture project that wasn't hers. It just wouldn't have been in the picture had she had to pay taxes on everything. So anyway, Brett, that was just.
That's great. I love that. I love the passion, and I love the encouragement and the the vision here again. So by the way, if people want to learn more, you can go to capitalgainstaxsolutions.com. And for those who don't know, I'm a third party unrelated trustee. Jake Miller is the financial advisor. And this is how we help people execute this by working as a team with the tax attorney who created the structure. So if no one has any questions, you can also put them in the chat, and then you can also unmute yourself. And then no worries if not either. Jake can talk for a very long time. I mean, this is kind of what we like doing. So, but is there anybody who wants to ask a question or have a thought or a comment? It could be.
I've got a question.
Yeah, go, Rebecca.
So, obviously, IPX is not your favorite 1031 exchange company. Do you have a couple that you use on a regular basis? Having been in luxury real estate in the Tahoe, Truckee area, I get asked quite often, who do you recommend for a 1031 exchange company? And they come and they go. So it's just
we do. And so if you go to capitalgainstaxsolutions.com and or email me Brett@capitalgainstaxsolutions.com, we can get you all set up and with them and connect it and making sure it's not just the company, but it's making sure that we properly set up the language inside of what's called the exchange document. So yeah, just get with us. Go to capitalgainstaxsolutions.com and you can schedule a time and or just email us Brett@capitalgainstaxsolutions.com and we'll get you all of that information.
Terrific.
Brett, I've got a question. Hassan here. Just met Brett recently at the conference. So appreciate you inviting me on the call and interested to learn some more. So could you walk us through maybe some of the structures, the ways that you can structure it if someone was going to be getting a gain? What would be some of the structures? Could they earn some income? Could they not touch it and just leave it in a trust? I mean, what are the options?
Yeah, let's talk about the flexibility of payback. So what are the terms of which the promissory note can be structured? What are the how can the payments be structured for the deferred sales trust? So the answer is you can structure it basically in just about any way that you could imagine. It could be interest only payments. It could be interest in principal. It could be any amount. There's no like limit on amount. What's going to hold you back is the tax. I can tell you, while most people structure it, it's structured with interest only payments, somewhere around 5 to 6%. Typically, our notes are structured at 8% compounding net of fees, but people will take that 5 to 6% payout because they don't want to dip into the golden goose that lays the golden egg, and that would be anything above 8% that they would be taking out. They can also delay the payments a few years so that they perhaps have some income tax deferral for a short period of time. So those would be the main ways. And then should they dip into principal, they'll pay capital gains tax, but as long as they're only taking interest payments, it would be ordinary income tax. They would get a 1099 reported to the CPA. Very simple. So that's how you would structure the deferred sales trust promissory note. Any questions there, Hassan?
Oh, that covered it perfectly. I appreciate that. Could you tell us what the typical costs are, maybe on a certain dollar amount or however you structure it?
Sure. What are the typical costs for a deferred sales trust? The answer is it's around 1.5% of the gross sales price of an asset and about 1.5 to 2% on a recurring basis for the trustee fee, as well as the financial advisor like Jake Miller on the phone call here. So let's break it down. Let's say it's $1 million deal, selling for $1 million. $15,000 one time would go to the tax attorney. That covers lifetime audit defense. And then let's just say $1 million hit the account, which is net of closing costs. Let's just say it was about $1 million. Then it'd be about $20,000 on a recurring basis. Okay, to cover the financial advisor and the trustee. There is a tax return fee. There is some miscellaneous bank fee. Generally speaking, we like to say we're going to try to earn 10 to net 8, and to net 8% compounding rate of return net of those fees. So that's the general fees. Any questions there, Hassan?
No, that covered it. Maybe one additional question would be, you said ongoing basis. Is that annually, or what is the term on the reoccurring portion?
Great question. What is the term on the reoccurring portion for the deferred sales trust? The answer is immediately at closing, the fees are charged for the trustee. That covers, it's like a prepaid plan, 365 days. And then once a year thereafter, although we do prorate it in October to get everyone on the same billing cycle. And then as the financial advisor, they will charge as those investments are made into those investments, typically at the end of the 30-day period. I'll let Jake answer that portion of that. Jake, any other points on that?
No, you're spot on there. So we take that amount that we charge, and it's of course divided over 12 months, and it's the 30 days after that you get billed for that management, not the 30 days before. So
thank you.
Yeah, and I'll also add, Brett, if I'm partnering with the trust to go buy a real estate deal on my own, do I still have the fees? The answer is yes. So no matter how and where the funds are invested, whether it be an active real estate deal, passive real estate deal, 100% passive with a securities professional like Jake, it's about 1.5% to 2%. Like no matter how you cut it. So every million, it's about 15 to 20,000. Now, of course, as you get higher and higher and higher, the fees do come down a little bit, right? But that's on the ongoing piece, as well as the tax attorney. If it gets bigger, he goes 1.25% on things above $1 million. You can also move multiple assets into the trust at different time periods and just collect and consolidate all of your funds. In fact, we just had a client. I'm looking at it right now. He has 50 properties, but they're about $8 million. So Jake and I are looking at this deal right now, and I'm going, the good news, he has like no debt. And so, but on a per unit basis, it's not great. Although what we're considering doing is having him put it into some LLCs, and he's totally open to this. He's like, hey, Brett, I'll sell them in bulk if it means I could do the Deferred Sales Trust. And so that's a way to consolidate the escrows and the transactions into one deal versus 50 escrows, which can be very expensive with the legal team and our team. So that's just FYI for those who are wondering about that.
great question.
Yeah, Hassan, thank you for asking. Any other questions, Hassan?
How would the fee structure change, Brett, if a person wanted to use their own financial advisor to invest their funds? What would change in that scenario?
Yeah, so in the scenario of we're always happy to work with others that have others, right? But what's really important is that everything is executed properly with the Deferred Sales Trust. So in those scenarios, what we would do is you are welcome to hire them on the outside as a kind of like consulting or financial planner perspective, and so that they can review what Jake and I would put together on the plan, right? And they can be a part of the conversation, right? So that's always welcomed, if that makes sense. And sometimes we're even mirroring or very close to what they on the other side are already managing for their personal funds. The key is, though, we don't want it to be too close to home where it can be construed as what's called unilateral control or too much control, and therefore it becomes taxable. And so we've got to be very cautious with those things to keep that separate. Does that make sense, Hassan? I think he's on mute. I'm taking that as a yes.
Yeah, I heard it, Brett. Thank you.
Okay. Yeah, you're welcome. Anybody else?
We work really well with other professionals, Hassan. Sometimes, depending on the client and their circumstance and what they're doing with the trust, sometimes we bring in a lot of outside professionals if you don't have them yourself. But we're not here to replace your people. But for all of this to work like it should, we kind of have to be here working with you to help it all go down the road like it should.
All right, good questions. Who else? Anybody else have any questions or thoughts,
hey
comments?
Brett. Ryan here.
Hey, brother.
I met someone today that they have a combination. They have a home in Temecula that's in the $1 million range, and then they own some NFTs. And we're going to talk a little bit later today. Some information, maybe you can kind of go over some things I can share with them about selling NFTs and how that will work with the Deferred Sales Trust.
Yeah, and by the way, for those who don't know, this is the Ryan Swarts, my older brother, best friend, best man on the wedding, and he's been on a couple times, and he's a realtor here in Sacramento, and he's part of helping to be a blog contributor for Capital Gains Tax. All that being said, Ryan, Thank you for the question. So the answer is it depends, right? So how do they hold the NFTs? How liquid are the NFTs, right? Are they decentralized, and what needs to transfer? But the short answer is get with us so that we can do an X-ray, Jake and I and the tax attorneys, of the deal, right, with the client before they trade or transfer anything, because that can create a taxable event. The cool thing is we do that all at no cost, no obligation. So Brett, you don't charge any fees unless they close the deal? Yes, there's no cost, no obligation, no cost, no obligation. We'll review it, we'll game plan it, we'll map it out, we'll mind map it out, we'll figure it all out. And the way I have the analogy is like the Rubik's Cube. It's going to be all disjointed, right? Different colors on every side. And you're going to, maybe move the cube a little bit. And then we're going to look at it. We're going to move it a little bit more. I'm going to throw it to Jake. He's going to move it more. We're going to throw it to the tax attorneys. And hopefully by the end of it, all of us coming in from different angles and all of our expertise is going to get the congruency of this. Now, to be fair, we have not done an NFT deal, although we do believe we have a clear roadmap on how to do that, which is essentially moving the NFT, transferring it to an LLC. From that point, transferring the LLC to the Deferred Sales Trust, and from that point, moving whatever needs to be moved that would have been taxable to the client, but is now would have been taxable to the trust, but the trust has a new basis, and so it remains in a deferral state. Jake, anything to add to that?
No, I mean, it's a perfect description. It'd be very similar to somebody who's, putting a business together for the first time. You're going to sell it down the road. You want a 1202 exclusion, right? And so it might have all these underlying subsidiary LLCs, something of that nature. We can do something different for a lot of the underlying business interests or projects or joint ventures, what have you, that you might have beneath a trust. And that's kind of one of the other reasons why Brett and I work so well together for a client, because, from a financial advisor perspective, I'm pretty agnostic when it comes to asset classes. And Brett, of course, he's out there helping you find deals, helping you scrutinize deals, run an analysis, make sure that, if you want a few more zeros at the end of what you have in your deferred sales trust, so to speak, rather than losing several percentages to taxes, we like to be able to grow and snowball that for you by helping you invest wisely, helping you be efficient. And of course, it comes at a cost, it comes at a fee. But even if you would like to call it somewhat of a premium, we definitely are worth our weight in gold in what we help clients do.
Absolutely. And so, Ryan, does that answer the questions or any more on that one?
Yeah. No, very well done. And I will definitely be getting them in touch with you guys. So thank you.
Yeah, you're welcome. Who else has any questions for Jake or I, or comments or concerns? I was on a coaching call this week, and the guy said, he says, any questions, thoughts, concerns, or hallucinations? And this is actually an hour ago. I was like, hallucinations? It woke me up. I was like, I don't think I have any hallucinations, But yeah, no questions or bad questions, guys. Anyone can ask them. Wait, we might have something in the chat here. What do we have here? What do we have here? All right. Looks like we got a chat person here. We've got AJ. Okay, would you like to discuss the steps required when doing a business partnership with the DST, such as 80-20% ownership requirements on the LLC agreement, etc.? Yeah, so we can go into a little bit of this. Some of this would be better offline, but big picture, you can partner with the trust to go start a business or buy some real estate or invest in a crypto. I mean, there's some flexibilities there for sure. And what's cool about it is it's in a tax deferred state. In fact, one of the best deals for this was a client of mine. He sold a $2.6 million business in Alabama. And his vision was to go build a new business, but the business was in the business of building apartment complexes. And so he was able to partner with the trust, of which he would have already paid the tax, use the money to go into the business, and he's building 72 units now. And he liked the Deferred Sales Trust so much that he's going for the gain on that apartment complex, which is about 72 units. He's going to roll that into the trust as well, plus the original amount back in, plus his partner on that, who was the general contractor, is starting the Deferred Sales Trust for the first time. In fact, his name is Shay Pope, and the other partner's name is Adam. And we just went to the best ever conference in Colorado. We did a whole presentation. I'm looking to release that entire hour-long deep dive with Dan Hanford from PassiveInvesting.com, myself, Stephen Preservato, from Von Finch Wealth and then Dan Hanford and then Shay Pope. We got a whole like it's like 70 people. It was really fun actually, and we got a kind of deep dive on that. So look for that to be released pretty soon. So, and if you have further questions about your specific deal, then you feel free to go to Brett, email me, brett@capitalgainstaxsolutions.com, or get with Jake. Jake, by the way, if people want to find you, where can they find you?
Yep, 1-800-773-1848. Again, 1-800-773-1848. Or Jake, Jake, at strategictaxsolutions.com.
Perfect. Awesome. So what else? Anyone else have any questions, thoughts, concerns? I don't know if I want to use the word hallucinations. I want to think of like a cooler thing than that, like hesitations. Maybe that's better. Any hesitations? What other hesitations do you guys have out there? Let's cover them now so that when you're out there, Holly, hello, welcome, Holly. You are ready to go, or you're ready to go for yourself, right? Because I know we also have, is it Emile? Is it Emily? I pronounced that right. It's a cool name, by the way. Adam, Spencer, Hassan, Fireflies.ai. We're still the Fireflies.ai. We hope you're like a crypto billionaire and you've just been watching us here, right? Which is cool. You're welcome to do that for as long as you want. We got Zoom user. That's it. Anybody else? Oh, wait, the 7 seconds. They say 7 seconds usually it takes for the brain to like raise their hand.
You know, Brad, and if nobody pipes up, we can go drink a little bit of water, have a snack, get ready for our next meeting in 20 minutes, and see if we can't conquer the world.
Yeah, we don't have to do the full 20 minutes. We can just everyone get out there, just go for it. I will, in the meantime, do a shameless plug for the book. You guys ready for this? The book.
You got to do it. I mean, seriously, it's got a lot of great information in it. I'm not talking about my chapter. I'm talking about everybody else.
So the Jake Miller is in chapter 3, I believe. He is behind the Kevin Harrington from Shark Tank. So sorry, Jake, you didn't make it quite there.
Hey, I'm okay with that. I mean, my goodness, if I'm after him, most people will forget who I am and everything else, but that's okay because I liked his part.
Yep. So the book, check it out. It's called Building a Tax Deferred Exit Strategy. In fact, I'm gonna need all of you guys and gals to be thinking about becoming launch partners. What does that mean? Well, it could do some support. You could buy the book. You could buy the book as a gift for somebody. You could rate reviews on Amazon. You could do a lot of different things. Get the Kindle version. So anyways, a lot of stuff's going to be coming. It's big news. It's really exciting. It's my journey from 2006 to 2022 with the Deferred Sales Trust, my life, my kids, family. It's got intrigue. It's got heartbreak, not heartbreak. It's got like, financial break. It's got like all kinds of cool stuff, but it's called Building a Tax Deferred Exit Strategy. And the goal is to try to help you do the same for yourself or for your clients. And we call it the proven playbook for unlocking your ideal wealth plan when selling assets of any kind for yourself or your clients. By the way, the Dan Hanford is in there. The Neil Bawa is in there. And Jake, they say to get together or get in rooms with people that are smarter than you. And so we have a guy like Tyler McBroom, who is like the CPA partner with the Tony Robbins, right? We have the Michelle Seiler Tucker. And you like how I say the, you guys watch like Monday Night Football and they're like, I'm from the Ohio State University. I'm like, what do you mean the? Like, was it like the Alabama University? It's kind of funny. But Michelle Seiler Tucker, top 10 M&A advisor in the country. We have Gino Barbaro, who's a multifamily syndicator. Don Einhorn, who's like a serial entrepreneur. We have Joe Fairlist, Brian Burke. These are like commercial real estate syndicators extraordinaires. Michael Blanc, Dr. Gurpreet Pata. You know what I'm going to try to do, Mr. Buck Joffrey? I'm going to just ask them to come on this. And I know I told you this is David Young, and David Young is going to come on. I did say that. I'm going to try to get all of these amazing people to see if they'll come on here, right? And we'll interview them about their chapter. How does that sound?
I think that'd be amazing.
Okay. A thumbs up. Like a yeah, Brett, do that, or in the chat or something there.
No, I mean, anytime you can get some like-minded people in a room, people that are really helping others, like Tyler McBroom, and my goodness, they were doing tax planning on the Tony Robbins, right? Mm-hmm. Tony Robbins negotiated a really sweet deal, kind of like cut their prices in half and then made it available to everybody. Right. And so everybody got this amazing tax planning service at a decreased rate because of Tony Robbins. And their firm has done amazing things all over the country and with people who work internationally. Yeah. So everybody here, Brett, needs a chance to get to know more about all of these individuals in your book.
Perfect. And with that, one last time, any questions, thoughts, hesitations from any...
Or hallucinations.
I'm not sure if I'm ready for that one yet. Although Jake and I will be in Cabo. We won't be hallucinating. We won't be doing anything crazy, but we'll be at a mastermind, by the way, with EXP commercial. It's going to be epic. We're going to be from Sunday. I kind of told him, I was like, to be honest, Jake, it's going to be like me and you masterminding on the Deferred Sales Trust with all these really cool, amazing people. And we're going to be making some videos. So look for us on Friday. Although I fly out. I got to figure that out. I don't fly out till 2. So yeah, we'll be able to do that. We'll be live from Cabo on Friday for next week. But yeah, that's really exciting. Any last thoughts on that before we let everybody go? Because we're just randomly just talking here.
No, I just think something else about us, Brett, is that we're always working with other professionals like all the time. And so we're being asked questions. We're asking questions about how and when and where should this work and how can we make it more efficient? And whether it was from the very first client that had a crypto that we helped figure things out for, to now the NFTs, to, clients with stock options or warrants, or if it's just the normal real estate stuff. And I say normal, but sometimes, mortgage over basis issues, we help people provide solutions to a lot of their everyday transactions that normally would be very problematic, but we bring the professionals to the table to make it happen.
Amazing. And people want to find you, Jake. Where can they find you one last time?
Yeah. So strategictaxsolutions.com. There's a little booking link there on my page. It's being remodeled, so to speak, but go to strategictaxsolutions.com or email me at jake@strategictaxsolutions.com.
Fantastic. And hey, about Rebecca Munson, if people want to find you, the luxury go to Tahoe, Lake Tahoe, Truckee area, realtor, where can they find you?
They can find me at Rebecca@RebeccaMunson.com. It's MONSON. Yeah. And awesome. I'm in the process of remodeling my website as well. Soon to be up and going a little bit better. So yeah.
Very cool. Very cool. With that, we had somebody just join. Welcome. If you have like 20 seconds. If you have any questions, that's cool. If not, we're going to wrap it up and we're going to encourage you to invite somebody, invite a skeptic, invite someone who has concerns, your CPA, whoever it might be, financial advisor, invite your friends, whoever who has passion for deferring capital gains tax and wanting to learn about the Deferred Sales Trust. Everyone's invited. And with that, I want to thank you for attending again, and we'll see you next week. And if you want to connect with me, you can check us out, capitalgainstaxsolutions.com. You can check us out on YouTube, Facebook, Instagram, LinkedIn, all of the above. Search Brett Swarts. And we look forward to talk to everybody next week. Have a great week, everybody. Bye now.